Can the 617 still be profitable with the theta decay? I don't know. Did you buy him $50 out of the money? I think their positions are compounding and that we're no longer on an F-man cycle, but we're simply on a cycle of deferrals of obligations to following OPEC dates. We ran in March. We didn't run for April OPECs. And then we ran again in May. This is not in line. If we run in June, that's insane. This is compounding obligations because in December they rolled forward obligations. In January they rolled forward obligations. In February they rolled forward obligations. So because they skipped this 3-month period, I assume in an effort to obtain liquidity, these obligations from these 3 months have compounded forward. And they're still building obligations as time continues. So in March, only 50% of the open contracts were closed on XRT. In May, only 20% were closed. Currently, June has an equal number of obligations due that March did. And July has obligations due as well. So, if you guys understand how compounding rates work, you should understand how compounding a position works. By not covering, they are simply growing the size of the offset position. Ticking time bomb is a way to put it. Up until November, we had seen them fully clear obligations. August, November, all of the obligations fully cleared. Borrow rate, nothing. We're no longer seeing that. They failed to clear all their obligations in March. The borrow rate only dropped to 5.25%, and we've seen an exponential increase in borrow rate since then. This time around, I don't think they'll be able to get the borrow rate lower than that. Likely higher, much higher, right? So, you know, if the bottom after June, you know, we're seeing the borrow rate in like the 20% range, then this is going to go up, you know, to like 200, 300%. If you guys want to look at borrow rate DDs, I wrote them like a year ago. I remember everyone was hyped about another month that had quad witching and everyone was sure Jimmy would rip, but instead it dipped hard. Why would this June quad witching be different? Sorry if you've already addressed this. I literally just addressed it. Because they've been rolling forward their obligations. They used to clear the advantage to the F-man cycle that they cleared on previously was that the obligations were already cleared by the time that we went into the ETF rebalance. The ETF rebalance poses several risks for them. And one of the largest risks posed is the dividends. All of these ETFs pay a dividend yield. Whatever they're short in the ETF when that dividend approaches, they have to pay the dividend on. So by clearing in November, they didn't have to pay a dividend in December, right? By clearing in August, they didn't have to pay a dividend in September. By clearing in May, they didn't have to pay a dividend in June. But by compounding their position in March and trying in an attempt to move the cycle forward without covering, they have compounded their position, and now they're clearing at an inopportune time